welcome back to Super Return International. It's a year since we last sat down together here. How have the conversations moved on in those 12 months, do you think, around the industry?
Yeah, I mean, it's interesting. It seems like not a lot has changed. Actually, the market seems relatively calm. It's functioning pretty well. We're seeing for sure the CLO market a bit healthier, the syndicated market operating, and private debt continues to take market share and continues to grow. But you've seen the market functioning actually pretty well in this environment.
So what's the current state of play for European credit?
Yeah, look, the market has been with a good backdrop. I think with the CLO market operating pretty well, you see the term loan market tightening in a bit, syndicated market. You're also seeing private debt continuing to play a role in transactions. There is a slow M&A activity though. So if you look at M&A activity and transactions, they're slow. There's a lot of extensions of debt, there's refinancings of debt, but in terms of new issue, it's a bit slow, and we expect it to pick up over the next 12 months.
Tell me about that, because obviously there's been a huge conversation at this event about those longer holding periods and pick up. Do you expect to see that? Are you optimistic?
Look, it's difficult because if you think about the vintage, so a 2020 LBO was done when rates were much lower, maybe leverage multiples were higher, and maybe valuation multiples also were higher. And so unless that business has grown EBITDA significantly, the multiple is probably lower, the PE firm has probably not achieved their target return, and they've got long hold periods. They can hold longer than 5 years. And so the typical deals, maybe going back for 20 years, a 3 to 5 year exit, now maybe it's more like 5 to even 10 years. And so we are seeing PE firms hold longer. But there are starting to see some IPO market picking up again, and you are starting to see some carve-outs and other activities. So I think the next 12 months, probably you see more activity.
I was just going to pick up on that really and say, what do you see as the most attractive potential in the next 12 to 24 months?
Sure. Look, one big area, of course, that's been growing a lot is the secured lending market. So, within our business, we are providing secured loans for LBOs. As the market picks up, there is demand. Now that competes with the syndicated market, but not every deal can go syndicated market. For example, a business maybe that's doing M&A that wants to do a delayed draw facility, for example, or tap its facility over time, may find a better solution with the private credit market. And I think that market continues to grow. I mentioned before CLOs, you see CLOs functioning pretty well, but still spreads are quite wide. So if you look at the stack from AAA down to single B, you're getting paid a lot of spread against a risk of loss, which is very low given the structure of the CLOs. So within the CLO debt, we think that's pretty interesting. And also CLO equity, we run 6 CLOs in our business, and we've grown that. We think that is a good asset class as well, and there's interest in that.
Given all of that you've described in terms of the landscape, what do you see as important in your teams for kind of navigating that? And what expertise do you need, and what do you, pride yourselves in terms of being able to manage in that sort of environment as opposed to one where it's been pretty easy for a decade or so?
Yeah, look, I think one of the interesting things is that in the financing market, actually PE firms are using both the private market and the public market to finance their LBOs. And so we have a broad business, we have a public market business, we also have a private business, we work together, we sit in one office in London, one investment committee. And so I think actually one of the skill sets is being able to be flexible around, is it going to be a term loan be syndicated? Is it going to be a private loan, a mezzanine loan, or a junk bond or a high yield bond? And I think that as a firm, we want to keep people abreast of all the markets because we have different products and different places we can execute transactions. And I think for the sponsors, they'd like the flexibility of considering both the markets.
And you need real expertise in your teams in all those areas. What do they look like, your teams?
Yeah, sure. Our teams, we have about 80 people. They're very smart. As I mentioned, they're dynamic. It's a quick-paced environment. You've got to be a bit cynical as well, though. If you look, defaults are picking up. You need to be able to work through those. It's quite difficult. It's a different skill set. So the restructuring skill, if you want to enforce on a business, that type of skill is going to be required more and more. So I think the team, again, they're intelligent, they're flexible, they're dynamic, and hardworking, and that's what you need in this environment.
You said hardworking there. It is harder work than it has been.
Yeah.
So with that in mind, what would you say the next couple of years looks like, and where do you see key challenges but also opportunities that might come out of that environment?
Yeah, look, I think the European market is continuing to develop. It's still, sitting probably maybe even a decade behind the US market in terms of size. The CLO markets are much smaller, the private debt markets are much smaller, the high yield market is much smaller. And so Europe continues to grow, continues to develop. I think you also see that the niches develop. So whether it's private loans, first lien loans, or the mezzanine market picking up, CLO investments in the tranches of CLO, you see more firms offering that as a product. So I think we're going to see more diversification of products, more offerings, even within the type of funds. You think about private debt, typically was done as a locked up fund, a closed-end fund for 8 years in some cases. And now we're seeing more hybrid approaches where funds are maybe commingled with some public securities and private securities and have liquidity features and have open-ended features. And so, part of what's happened at AlbaCore the last 12 months, we've done a transaction at the GP with First Sentier Group, part of Mitsubishi. And as part of that, we're seeing demand out of Japan for credit. And we're creating certain products in that market. They don't like closed-end products, so we have to be creative about that. But I think the market will continue to evolve, continue to develop and mature, and you'll see lots of different types of offerings, lots of different managers, and the market will continue to grow as well in Europe because it is, again, probably many years behind the US, and it's got room to grow.
It sounds like from what you're describing, no resting on laurels. You've got to be creative in this sort of environment.
Yes, exactly.
Well, it's been really great to talk to you, and I look forward to seeing where that creativity takes us with our conversation next year.
Thank you very much, and good
Thanks
to see you
for
again.
joining us.
Thank you.